What if I told you that your credit score could be the difference between getting your dream home or being stuck paying sky-high interest rates for years? It sounds crazy, but it's true. Your credit score is like this secret financial grade that follows you everywhere. Most people don't realize just how powerful a good credit score is until it's too late. They get denied for loans, can't rent that amazing apartment, or get stuck with interest rates that are through the roof. But don't worry, I'm here to help. Today, I'm going to show you how to boost your credit score fast and take control of your financial future. We're talking actionable steps you can start using today to see real results. So if you're tired of being denied loans or paying ridiculously high interest, stay with me until the end. Trust me, you don't want to miss this. Your credit report is like a financial report card. It tells lenders how responsible you've been with borrowing and repaying money. Think of it like this. If you were a bank, would you lend money to someone with a history of late payments or unpaid debts? Probably not. That's why it's crucial to check your credit report regularly for any errors or inaccuracies. You'd be surprised how often mistakes happen. We're talking about incorrect account balances, payments marked late when they weren't, or even accounts that don't belong to you. These errors can seriously drag down your score, making it harder to get approved for loans or credit cards. But the good news is, fixing them is often easier than you think. In the next section, I'm going to show you exactly where to get your free credit report and how to dispute any errors you find. Stay tuned. This is important stuff. Here's the deal. You're entitled to a free credit report from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion, every 12 months. That's right, totally free. To get yours, head over to annualcreditreport.com. Don't go to any other site claiming to offer free reports, as they might be scams or try to upsell you on services you don't need. Stick with annualcreditreport.com, It's the official site. Once you have your reports, take some time to go through them carefully. Look for any discrepancies like incorrect personal information, accounts you don't recognize, or late payments that you know were made on time. If you find any errors, don't panic. Disputing them is actually pretty straightforward. You can usually do it online or by mail, and the credit bureau is required to investigate your claim. This simple step could give your score an instant boost. Alright, let's talk about credit utilization. This is a fancy term for how much of your available credit you're actually using. Think of it like this. If you have a credit card with a $10,000 limit and you're currently carrying a $5,000 balance, your credit utilization is 50%. High credit utilization is a major red flag for lenders. It tells them that you're relying heavily on credit and might be a higher risk for defaulting on your payments. Ideally, you want to keep your credit utilization below 30%. But here's the pro tip. Aiming for below 10% is even better. This shows lenders that you're responsible with credit and not maxing out your cards every month. So, how do you lower your credit utilization? It's simple. Pay down your balances. If you have high credit card balances, the best thing you can do for your credit score is to start paying them down as soon as possible. Remember, the lower your balances, the lower your credit utilization, and the better your score will be. Don't wait until the due date to make just the minimum payment. Instead, consider making multiple payments per month. This helps you pay down your balance faster and can also reduce the amount of interest you accrue. Another strategy is to look into balance transfer credit cards. These cards often come with introductory 0% APR periods, giving you some breathing room to pay down your debt without accruing interest charges. Lowering your credit utilization is one of the fastest ways to boost your credit score. It shows lenders you're responsible with credit and can handle your finances effectively. Let's talk about a simple trick to boost your credit score without spending extra credit limit increases. Credit utilization plays a huge role in your score. Maxing out a card screams high risk to lenders. Increase your limit, keep spending the same, and look safer. Be strategic. Don't ask for a limit increase to shop more. Lower your credit utilization, not rack up more debt. Show lenders you're responsible with credit. Keep spending in check, pay bills on time, and handle a higher limit. Your credit score will thank you. payments. Don't ask for a $10,000 increase if you're only making $3,000 a month. Start with a reasonable amount and see how it goes. And hey, even if you're initially denied, don't be discouraged. Call the credit card company and politely ask why your request was denied. It could be something as simple as a recent late payment that you can easily explain. Remember, communication is key. Let's be real, life gets busy. We've all been there. Juggling work, family, and a million other things, and sometimes paying bills on time can slip our minds. But here's the thing. When it comes to your credit score, even one missed payment can have a significant impact. Think of your credit report like a financial report card. Every on-time payment is a gold star, while every late payment is a big, fat red mark. And just like in school, those marks can stay on your record for years. The good news is, there's a simple solution: automation. By setting up automatic payments for your credit cards and other bills, you can ensure that you never miss a payment deadline again, even if you forget. Trust me, setting up autopay is one of the easiest and most effective ways to build a solid credit history. Setting up autopay is usually a breeze. Most banks and credit card companies offer this feature through their online portals or mobile apps. You can choose to pay the minimum balance due, the statement balance, or even the full balance each month. Personally, I recommend setting up autopay for at least the minimum amount due. This way, you'll never get hit with a late payment fee, even if you forget about the bill entirely. Plus, it shows lenders that you're committed to making at least the minimum payments on time, which can reflect positively on your credit worthiness. Now, I know some people are hesitant to use autopay because they're afraid they might overdraft their account. But don't worry, you can easily set up alerts to notify you before a payment is processed, giving you ample time to make adjustments if needed. Remember, autopay isn't about relinquishing control of your finances. It's about simplifying your life and ensuring that your credit score stays in tip-top shape. So why not take advantage of this powerful tool and automate your way to a brighter financial future? Alright, let's talk about those of you who are new to the credit game or maybe haven't had the best track record in the past. Building credit from scratch can seem daunting, but I'm here to tell you it's absolutely possible, and it might happen faster than you think. One of the quickest and easiest ways to jumpstart your credit journey is by becoming an authorized user on someone else's credit card. This basically means you're added to an existing account and get the benefit of that card's positive payment history, even if you don't actually use the card yourself. Now, before you go asking your friend with the highest credit limit, there are a few things to keep in mind. First and foremost, you want to make sure the primary cardholder has a good credit history themselves. Look for someone who consistently pays their bills on time and maintains a low credit utilization ratio. Secondly, communication is key. Be upfront with the primary cardholder about your intentions and make sure they understand that their responsible credit behavior will directly impact your credit score. If becoming an authorized user isn't an option, don't sweat it. There are plenty of other ways to build credit from scratch. One popular option is a credit builder loan. These loans are specifically designed to help people establish or rebuild their credit history. Essentially, you borrow a small amount of money, which is typically held in a savings account until you've repaid the loan in full. Your payments are reported to the credit bureaus, helping you establish a positive payment history. Another option is to explore services like Experian Boost. This service allows you to get credit for on-time rent and utility payments, which are typically not reported to credit bureaus. By linking your bank accounts to Experian Boost, you can potentially give your credit score a nice little bump. Remember, building credit takes time and effort, but it's a crucial step towards achieving your financial goals. Whether you're starting from scratch or just looking to improve your existing score, there are plenty of options available. So stay informed, stay proactive, and watch your credit score soar. Now let's talk about diversifying your credit mix. You see, having a good mix of credit shows lenders you're responsible with different types of debt. It's like having a diverse investment portfolio, but instead of stocks and bonds, it's credit cards and loans. Think of it this way. If all you have are credit cards, it might look like you're reliant on high-interest debt. But if you add in something like an auto loan or a mortgage that you're paying on time, It shows you can handle different types of credit responsibly. That being said, you don't need to go out and get a mortgage just to improve your credit mix, especially if you're not ready for that kind of commitment. A smaller personal loan or a secured loan can also do the trick. The key here is balance. Don't go overboard and open a bunch of new accounts all at once. Remember, each new account triggers a hard inquiry on your credit report, which can temporarily lower your score. We'll talk more about hard inquiries in a later chapter. I know some people are afraid of loans, and I get it. Debt can be scary, but not all debt is bad debt. A well-managed loan can help you build credit and save money. For example, you need a new car. You could save up and pay cash, or take an auto loan and invest your savings. Choose a low-interest loan, pay on time, and build credit. Not everyone should get a loan. Consider your financial situation carefully. A loan can build credit and achieve goals. Do your research and make informed decisions. You might think closing old credit cards you don't use anymore is a good idea, right? Less temptation to spend, less clutter in your wallet. But hold on. Closing those accounts could actually hurt your credit score. Credit age makes up about 15% of your FICO score. The longer you've had credit, the better. Closing an old account shortens your credit history. This can lower your average account age. Lenders prefer a long, responsible credit history. So what should you do with those old accounts? If they have annual fees, ask to waive the fee or switch to a no-fee card. If they can't, closing might be best. But if it's a no-fee card, keep it open. It's a simple way to boost your credit age. Building good credit is a marathon, not a sprint. Now, I know what you might be thinking. Graham, I've got like 10 credit cards. Do I really need to keep them all open? And the answer is, probably not. Having too many open accounts can actually work against you, especially if you're not managing them responsibly. It's all about finding a balance. If you're worried about having too many cards, take a look at your credit report and see which ones are the oldest. Those are the ones you definitely want to keep open. You can consider closing newer accounts if you're not using them or if they have high annual fees. But remember, closing accounts should be a strategic decision, not a rash one. Before you close any account, think about the potential impact on your credit score and weigh the pros and cons. It's always a good idea to consult with a financial advisor if you're unsure about the best course of action. Remember, every little decision you make regarding your credit can have long-term consequences. By being mindful of your credit age and managing your accounts strategically, you can set yourself up for a brighter financial future. Alright, let's talk about something called hard inquiries. Sounds kinda intense, right? Well, in the world of credit scores, they can be. Basically, a hard inquiry happens every time you apply for new credit, like a credit card, a car loan, a mortgage, or even something like a store credit card. Whenever you apply for credit, the lender pulls your credit report to see if you're a good risk. This pull is recorded as a hard inquiry on your report, and too many hard inquiries in a short period can actually lower your credit score. Think of it like this. If you're constantly applying for new credit, lenders might think you're desperate for cash, which can make you seem riskier. Now don't freak out if you see a few hard inquiries on your report. They're a normal part of managing your credit, and a couple of them here and there won't make a huge difference. The key is to be mindful of how many hard inquiries you're racking up and to space out your credit applications. So, how can you minimize the impact of hard inquiries on your credit score? Be strategic about when you apply for new credit. Shop for big loans within a short window, like 14 days. Check your credit report regularly to catch unauthorized inquiries. Understanding hard inquiries helps you maintain a healthy credit score. And there you have it, the ultimate guide to boosting your credit score fast. We've covered a ton of ground, from checking your credit report for errors to managing your credit utilization like a pro. Remember, your credit score is a reflection of your financial habits. And by making smart choices, you can build a strong credit history that will open doors for you in the future. By following the tips and strategies we've discussed in this video, you can see improvements in your credit score in just a few months. But remember, building good credit is a long-term game. It's about consistency, responsibility, and making informed decisions that align with your financial goals. If you're just starting out on your credit journey, don't get discouraged if your score isn't where you want it to be right now. Every step you take towards improving your credit is a step in the right direction. And hey, if you ever have any questions or need a little motivation, you know where to find me.